Well, good afternoon, everyone. It is time to be here for Stock Investing for Beginners. The bell just sounded. The market is closed for the day, and appreciate you taking some time out of your busy schedule this week to be here with me. Big shout out to Eva and Gary and Scott Luck and Robert and um, so I think I saw Simone there and Jim and everybody else, Jay Richardson, that's here today. Thank you for being here. We've got Barb in the chat. You can follow me and Barb on x.com at Scott Thompson CS or at Barb Armstrong CS. A great place to keep in touch with us, see some posts about the market and things like that. Um, One of the things I wanted to cover today was, as we start to see the markets transition or sector rotation. And so, a few months ago, we ran some, I showed you a very fast way to see which sectors are outperforming. So we're going to do that today. There's two sectors, at least it appeared about an hour ago, that were outperforming the S&P 500. The other nine were underperforming over the last 3 months. So we'll take a quick look at that, run a scan in that new sector, and then take a look at our open positions. We did get stopped out of a few positions this week, so I wanted to review those, but we're going to jump right in. A lot of stuff to cover. Before we do, though, just remind everybody the presentation today is for informational purposes only. The stocks that we cover are not meant to be recommendations. The strategies that we're trading are not meant to be recommendations or may not be suitable for all investors. Schwab does not recommend the use of technical analysis as the sole means of investment research. We are using the paper money software platform of Thinkorswim, and that's a little bit different in some areas, very similar in other areas, and extremely different in other areas to the live trading. So be aware of that. As always, we talk about stop orders in this particular webcast. There's no guarantee that the execution of a stop order will be at or near the stop price. Could gap over that stop price and fill much lower than what you expect. Also remember that everything we talk about is regarding investing, and investing involves risk, including loss of principal. Past performance is no guarantee of future results. So let me jump in here real quick and let's take a look at the market posture. I will have you guys participate here. We've done this a number of different times. So this is our top-down analysis. When we're doing kind of looking for sector rotation, one of the things that's very good to start off with what's going on with the market, and then the sectors are below that, and then we can either look for stocks in industry groups in those sectors, or we can look for stocks in those sectors. I typically just skip over the industry groups part and look for stocks in the whole set of industry groups. But based on our discussion and our uh, training and education over the last several months, what is the long-term posture? I'll let you guys tell me as we go through these three little grid charts. And I've also posted several scripts that we'll be using today. This script is the three chart grid system. So all of those are available there in the chat, and they're also available in the description of this webcast if you're watching the archive. But what is that long-term posture? Well, the 10's above the 40, so we're bullish. We jump over here to the intermediate posture. Do you guys recall there's just one thing that we're generally looking for on the intermediate posture? What's that intermediate posture? And how do we determine that? Well, the intermediate posture, one of the easiest ways is just look at the direction that 30-period moving average is going. So the 30-period moving average is rising. There's probably no question about that. It's not oscillating. It's not going back and forth. It's just been up, up, up over the last several weeks. And so we would say our intermediate posture is bullish. And then the short-term posture on that third grid chart, we're looking for a series of higher highs and higher lows. I did want to point out this particular, chart that I've shared with you guys has the Williams fractal candlestick pattern study set, if you will, or that's what's generating these red and green arrows. This one right here, and this is probably a good reminder that even a study set has its own principles and rules, but that may not fit really well into your own definitions. So, for example, they're saying this is a low in the trend, and the reason that I don't agree with that is because in order to get a high in the trend, I think you have to have a close below the low of the high day. And so as the stock was rallying over here the last 4 days. This is back on the 11th of May. The low price that day was 7,384, and it traded below that, and that's probably why the Williams fractal put an arrow there, but it didn't close down there. So for me, just as a technical trader, I'm probably looking at all of these candles up until this red arrow as just a continuation of that short-term bullish move. And the reason that that's important to me or to some technicians is because this low, which I do agree with, we had a 3-day pullback, a really nice bounce on the 20th, and then we've started to see some upward momentum here. But this low and that low are similar lows, right? Do you guys see that? And so if a technical trader called that a short-term low in their trend rather than this low back on the 4th, then that may change their posture from bullish to neutral, because now we're not making higher highs and higher lows. We're making higher high and a similar low. And so you'll have to decide for yourself what that is. I don't like this arrow just because on my own personal definition, a close below the low of the high day did not happen until this candle right here on the 15th. And so that one to me, I'm just kind of ignoring that. And I see a series of higher highs and higher lows in those arrows. And so my short-term posture would be bullish. But I wanted to cover that with you today. Just that's a little nuance in, reading charts, reading the different indicators, and why it's important to have your own definitions of those highs and lows and trend and how you are going to interpret those. All right. Now, the other thing that I wanted to cover here as part of our top-down analysis to see what sectors are outperforming the S&P 500. And so I've created this sector list. It's actually available for you as well. Here's the S&P 500 sectors. Oh, wow. You can look at this on your own. I actually recreated this list. So I took a look at these sector indices, and then I created a personal list called sector indices with the SPX. So that SPX symbol is in there. Hold on a second. Sorry, I didn't want to cough in your ear there. So this is what this watch list is right here. Let me open it up. Is this sector indices with the SPX. And I'm going to pop this off the screen here. I'm going to detach the gadget and we'll just look at it together over here. So I've sorted this by the 3-month column header. This script or this uh, column headers also there in the chat if you want to upload that into your own Thinkorswim, so you have it. But I just have a 3-month percent change. And so if you sort by that, you can see which ones are outperforming the S&P 500. The S&P 500, of course, I have here over the last 3 months, it's up about 8.85%. And we have two sectors that are outperforming over that time. Consumer discretionary is just below that. But what I thought we would do is take a look now in the sectors that are outperforming. And we have Infotech, which, earlier in the year was outperforming and then it was underperforming there. And we have a new one, this communication services. And I thought that was interesting because we don't see that one up in this outperforming very often. And so, this is kind of interesting to see that. And so what I wanted to do then is to go use our sector, our 2 green arrow scan. And, you guys can do it in the Infotech. We've done that a number of times in the past, but I wanted to do this in this communication services sector to talk about some of the nuances associated with some of the searches and some of the scripts and things like that that you'll get. Now, we are using the studies. So remember the scan feature in Thinkorswim, if it uses a study, that only works in the live version of Thinkorswim. So like when you sign in, there's a live version and a paper money. And so this is the live version of that. This scan I have shared also with you. It's there in the chat and it's also in the description. But I wanted to go through this with you together and just talk about some of the things that come up or came up when I ran this search. So, you could do this way. The 2 green arrow scan are these components here. We're looking for stocks between about $20 and $300, 500,000 shares of average volume. The MACD histogram's gone green within the last 5 days, and the stock's trading above the 50-period moving average. That's what this scan looks for. And so when we're identifying which sectors are outperforming, we can just go up here and scan in all symbols, or we can pick the different sector that we want to look at. And if you go down to industry, these are those sectors that we have. And so here's consumer or communication services, information technology, and consumer discretionary is the third top sector, but it's actually underperforming the S&P a little bit. So I wanted to go here to communication services, and then here are the different groups in that, but we're just going to select all communication services here. And so now in general, let me go back to this one here. We've been looking for stocks in the S&P 100. That's been our primary watch list. And we've been looking for two green arrows, which if you're brand new to the webcast, the two green arrows is a green arrow on the MACD histogram, and it's a green arrow on the 50-period moving average. And all that means is basically there's been some upward momentum and the stock price is above the moving average. And those are our criteria that we use to determine whether or not we have a buy signal. So if we go to green arrow scan in communication services, which is the new sector, we haven't ever seen this sector in the top three since we've been doing this. So I thought, number one, this was kind of interesting. But if we intersect with the S&P 100 and I run the scan, what happened? You guys see the result right here? No matching symbols. So how can we expand this search now and modify our search criteria if needed in order to see if there's anything in communication services? Okay. Well, the very first thing that we usually have done, and we've done this before, is we'll intersect not with the S&P 100, but we'll go to the S&P 500. Okay. So that would be the first step that I would do, is to change my intersect with the S&P 500. Now, if we run the scan again, we still don't have any matching symbols. Okay. So now what could we do? Well, one of the things I thought was interesting about this particular sector is there's a lot of inexpensive stocks in here. You know, stocks that are trading above $10 rather than above 20. So let's take a look at that. Let's put this down at, say, $10. And we're changing that parameter. And if we click the scan now, you know, I get one stock. So it looks like Jay Richardson may have 5 there. And so this is another thing where some of these scripts aren't guaranteed for accuracy or time, right? Is depending on when you run them and which system you're on, we may get different results. But this one has come up before in the S&P 500. Another one that came up that I'm surprised isn't here is TTD. So we may take a look at that one. But I do want to go look at those real quick because I want to show you something that is important to understand when we do this. So I'm going to change my chart back to our green arrow chart. So this is just our 50-period moving average. The purplish line is the 1% envelope below the moving average because that's what we use for our stop. But let's take a look at that P Sky that came up. So P Sky does have a green arrow on the MACD that went green yesterday. It's above the moving average, so that's green. But my question to you would be, is this a valid buy signal based on the rules that we've talked about over the last almost a year now? Is that yes or no? You know, our objective with this two green arrow system is to buy uptrending stocks and hold them until the trend is basically over. Hopefully that's for years, but you know, sometimes it's a couple months, sometimes the trend changes right after we buy it and we get stopped out a week or two later. All right, here. So Eva says, based on TOS, algos for it, yeah, something like that. Jay Richardson answers the question, no, the 50-period moving average is not rising. I would say at best this is oscillating back and forth. So even though this one came up on the scan, technically it's not a buy signal because that moving average and the trend is very flat through here, okay? TTD, which didn't come up this time, it came up earlier when I ran it. Oh, that's why. Uh, Earlier today, it was above the moving average, but it closed down below it. So that's why it didn't come up on the search here. But even if that was closing up here at 22.95, is this a valid buy signal? If the MACD and the stock price were green, we would say no because the moving average is falling. So that's an important distinction when you're looking at stocks and they come up on a scan. It's possible to get a scan result that still isn't a valid buy signal. So you want to keep an eye on that. So let's go back to our scan now. We did communication services. We still want to take a look in there. We did the S&P 100 and didn't get anything. We did the S&P 500 and didn't get anything. Now, before I jump out of the S&P 500, and this is the top 500 companies there in the US market. So some of these companies in the communication services may not be in the S&P 500, but one other change I'm going to make to this scan before we jump out of the S&P 500 is I'm going to change this down to say 100,000 shares. 100,000 shares of volume. So let's run that scan, and it still just gives us one here in the S&P 500. Now, how would we do this? Yeah, Eva says Paramount's been a mess for years. So yeah, and so there's some fundamental criteria that others may want to look at and say, that's downtrending and don't even want it, or it has horrible fundamentals, I don't want it, or good fundamentals, I don't want it. So that's up to you. But on this search now, let's go here. Let's clear that filter out. So now all that we're looking for is communication services, $10 stocks with 100,000 shares of volume. And if we scan it now, there's actually 29 results. And I didn't want to look through all of these in our class. I've actually looked at pretty much all of them prior to class, but I'll let you go through here and decide. Hopefully these will load up here. Let me see if can I shrink that up there? Yeah. So here's our watch list of these stocks. So ADV's at the top and then ZD down here at the bottom. And you'll notice a lot of these are number one, some of their volumes are fairly low. They're all above 100,000. Some of their prices, 1087, $14, 1105. Some of these may not be attractive to you as an investor. So, you'll have to decide there. And what I did is I just took a look at most of these and tried to determine, whether there was that technical buy signal. And so there were three of these that I wanted to look at and discuss with you today and probably place a trade on a few of them. All right. So I'm going to choose Siri TSAT, TSAT, which is this Telestat sat company. And then the one other one I wanted to look at was NetEase or NetEase Inc. This one I've seen over and over again through the years. I'm very familiar with this company, but most of these other ones I didn't really know much about and still don't, honestly. But I want to take a look at these from our two green arrow perspective. All right, let's go look at those three stocks. And then there were a few in the tech sector that I wanted to look at, and try to place a trade on those. And then we'll look at our open positions for some if we need to adjust a stop. All right. So the very first one on the list was Siri. Okay, SIRI. And this is Sirius XM. It's not Siri on Apple, but Sirius XM. And one of the things I think is useful, like if you're coming across stocks that you're not extremely familiar with, I always like to go out on like a 1 year chart or maybe even more just to get an idea of what the trend has been. In Sirius, I remember, I think looking at this when the stock was around $3 or $4 and just didn't really pay much attention to it. This stock has been trading sideways almost all year. And so one of the things that's interesting about any system that you have is to go back and look through a chart and determine like, oh, maybe I could have bought it there, or maybe I should have bought it there. Now, I want you to take this away from our class. There are thousands of stocks out there in the universe, and you cannot watch or trade all of them. You're just not going to be able to do it. So one of the things that I want you to be cautious with or careful of is being too critical of yourself for missing a trade in the past. You know what I decided to do after I had missed many trades when I first started was I decided, I'm going to keep a main watch list of stuff, and our watch list is that S&P 100, and I don't really want to miss a trade in that group. Does that make sense? And then as I find new stocks, Kevin Horner does a great job of talking about new stocks in our Trader Talks webcast in the mornings. A lot of times he'll introduce new companies that are hitting the radars of, institutions, or, starting to see some volume and things like that. But, the point is I don't want to miss a buy signal in my own watch list. And then as I become familiar with uptrending stocks or stocks that are interesting to me, I might add that to my watch list. And then I just want to be picking up that next opportunity. And then the other reality is sometimes you don't have any money, right? There's many times in our webcast where we've had 18 or 19 open positions. And so we have very limited funds in order to trade. If we're putting $500 in per trade, we can do about 20 open positions, and that'll eat up about our $10,000. Okay. So, and then Eva brings up a great point. If you go to the Analyze tab and click over here on fundamentals, you can type in the symbol and get some information, and scroll down. It'll give you a little paragraph of what it is. You can check out their earnings over time and a whole bunch of technical data here, or not technical, this is fundamental data, and determine whether you or not you want to purchase this type of stock. All right. So, great resources available here in Thinkorswim. You can do some more in-depth research on um, the schwab.com page. All right. So let's go here. And one of the things I wanted to do is just quickly, the trend was kind of down over here. Somewhere over here in March, that moving average started rising. So probably somewhere in this neighborhood, we could have identified some resistance. Let me go in here and change my drawing to, we could have drawn some resistance in there about 2287. We got a green arrow when it was just trading above that area. So maybe right there about the 25th of March. If we had been watching Siri, that would have been an opportunity to get in. Obviously here we broke out of the big channel with some, the MACD didn't ever go red, but it turned green again, or kind of started back up here. Broke resistance of 2492-ish there on the 17th of April. Went up and made that new high, consolidated a little bit, got a little bounce off the 20th of May, broke that short-term resistance there and the the 1-year high there. And so right now, right this second, what we're asking ourselves is this a valid buy signal based on the technical analysis from the moving average rising, the MACD, and the price being green? And the answer is yes, it does meet those technical criteria. Now you'll have to decide whether you want to go in there or not. And so one of the things I like to do is I like to look at my stocks that I think have a valid buy signal. And then, depending on the money that I have available, is determine which ones I want to buy. So here's Siri. So I'm going to go back to this 3-month chart so we can just kind of have a look here. Siri, another one that came up in that list was TSAT. Now, Telesat, again, I'm not very familiar with this company. It's been trending up nicely over the last 3 months. Got a green arrow on the MACD yesterday with a nice break of that little ascending triangle price pattern. And so this is a valid buy signal based on our technical rules. If we wanted to do a little more in-depth analysis, we could go over here to Analyze, type in TSAT, get an idea of what is showing here. If we didn't know what the company did, we could read it about it here. We can kind of see what's been going on with their earnings and their dividends and everything else, their return on equity, which fundamentally this doesn't look all that strong. Earnings are declining, return on equity is declining. So again, this is, when you're doing the in-depth analysis and you're trying to determine, which one to buy, these are some good things to look at. So there's that chart, TSAT. The other one was NetEase, NTES. Now, This one is one of those where it's been trending down, started to consolidate. We had a really nice breakout yesterday, and looks like a shooting star candle is what we're getting today. So the stock, we wouldn't be surprised. Now, this is another good takeaway from our class today, is after a breakout, about 70% of the time we'll see the stock rally and then pull back and test the old resistance as new support. So I think as an investor and a trader, we want to be prepared for that. That was a mistake that I made when I first started investing was, I'd see these valid buy signals. The original plan that I learned was very similar to this one that I'm been going over with you, but I just didn't understand that like the stock could and often would come down after I bought it. I always felt like, oh, it saw me buy it and that's why it went down. But the reality is when it breaks out like this, it's really been going up for about 4 days in a row. And so those shorter term traders start to think, hey, you know what? Maybe I'll take some short term profits here. And that's typically some of the psychology behind why the stock might come back. So even though we have a valid buy signal here today based on our rule set, mentally I want to be prepared for the stock to pull back on this one here. Okay. And so this is an ADR. Eva brought up that it's a Chinese company. ADRs have specific risks involved with them as well. So this is some people may not want to trade this just because it's a foreign company. There might be some exchange risks here involved with an ADR type of a stock, but it's basically a foreign company that trades on the U.S. markets. That's what this ADR essentially means. Now, again, we could go to the Analyze tab, take a look at NTES. We could see over here, this is in Hangzhou's, and I don't know how to say that, but obviously over there in China. But it gives an idea of what they do. Their earnings are actually growing year by year by year. Their return on equity looks like it's improved up to 2023, been a little flat since 2023. And you can check out the other financials here on this Analyze page. But of the, what is that, three we've looked at? Of the three that we've looked at, this one appears to have the better fundamentals. So if you could only choose, one of those three, SIRI, TSAT, and NTES, this one looks like it had the better fundamentals. That doesn't mean, this one will make money, and it doesn't mean the other ones won't make money. So just be aware of that. All right. So on something like this, I see Wiley's putting in there conditional order. Now that conditional order could be, let's put a limit order down here about 119.50 and we'll pick it up on the pullback. What's the problem with that? Or the challenge? May not pull back, right? So could do a conditional order. You could say, well, if it goes up again tomorrow, you could do a buy stop above today's close, just saying, hey, if the momentum's up tomorrow, then I'll get in. If it starts pulling back, then I'll wait for it to bounce, which is fine. We could do that split order. We could buy half our position here and the other half, at a limit price or when and if it pulls back. We only have $500 to play with here for this position. So I'm going to go in with all three shares just right here at this trade. Now, one of the things I think is important to remember is our initial stop. Our rule says to put the stop 1% below the moving average. Now, this is one of those, again, that's really kind of the eye of the beholder. You as the investor have to decide what you want to do. We know based on our rules that it has a valid buy signal. We expect the stock to pull back and test this 119.50 area as the new support. That may or may not happen. We see a little gap area here. The moving average is down here. And our stop theoretically should go right there. Let's see that value. Wow, I can't see it up in there. Let me get rid of my little cursor here so we don't have. So 113.71 is where that stop would go. So let's kind of walk through this a little bit. We'll do our right click and place an order there near the close, buy custom with stop. Let me shrink this down here. And just kind of go through the mechanics, right? We're looking to invest up to $500, so I could probably do 3 shares. So let's adjust that first. If we wanted to split our entry here, get in, see it pull back by the other half, we could do that. There's not much of a half a three, right? We're going to set our limit order at today's close. And so what will happen is sometimes after market, the bid ask quotes will be different. And so I'm just going to go in and change it back to this 123.92. Oops. For our entry. And then our stop, let's talk about the stop for a minute. I'm going to change it to manual just so it doesn't move around on us. Our stop rule said to put the stop at 113.71. So I'm going to put that in here first, and I just want to talk through this with you. 113.71. So we're risking about $10 per share. And so the very first thing that I would say is, what's my check? We're investing $500 per trade, but we also don't really want to risk more than about $50 per position if it hits our stop. And so if this went down and hit our stop about $10 per share away, we'd lose about 30 bucks, and that's within our $50 tolerance. Some of the stocks that we've looked at in the past allowed us to buy a lot more shares, and the stop, if we got stopped out, would have been a greater than $50 loss or 0.5% of the portfolio. So that's one check that we want to go through. We want our stop to be good till canceled. And even though the market's closed, the day order really should be good through tomorrow, but I like to always put good till canceled on that there. Now the other check, and we've done this many times in this class that I think is important. Let me shrink this down a second. Is if it came down and knocked us out, if it stopped us out at 1371, would we be okay with that? Now, this isn't there's not necessarily a right or wrong answer to this, but I do want to think about it. This is one of the checks that I always like to ask myself when I'm setting my stop. Most investors would do the same, is they're going to say, does that stop make sense? If we get knocked out at 1371 or 113.71, are we okay with that? Well, in this case, I'll give you an argument for. It's like, yeah, if it goes down there, because I'm expecting 119.50 to be my new support. I don't want to see it anywhere near 113.71. And that's fine. Nothing wrong with that. That is the expectation that this will hold a support. May not happen. So having the stop there at 113.71 would be okay. You'll notice the trend was down. It's been sideways for the last several weeks, and now it's breaking out. Some investors might say, well, I don't know how long this is going to take really to get that really new uptrend started. And I don't want to get knocked out here. But if it goes down and makes an intraday lower low below like this 112 area, then knock me out of the trade. And so you could do that. You could set the stop a little bit lower than the rule says. Or if you have the room, you might say, you know what, I'm going to buy 3 shares of this. And yeah, there was an anomaly down here on earnings where it went down to 106.06. But, as long as it stays above 108.84 for now, I'll let this thing bounce around for a while. And so you guys, you just have to decide for yourself where you want that stop to go. CB has chatted in here that $3.64 is the ATR. Now, ATR stands for average true range. It gives us a feel or an idea of how much the stock trades on kind of a daily or normal basis. So having a stop $10 away like we do, that's 3 ATR away. And that's another way that some people will set their stops, is often 2 or 3 ATR below their purchase price, which is great, I think, if you're getting in near support levels. But if you're getting in near potential resistance, sometimes a 2 ATR stop may be too close. So here, I'll just throw this out to you. Which stop do you want to use? Okay. Here we're going to buy 3 shares no matter where we put the stop. It's just, do we want to risk $10 a share, go a little bit below 112 and risk maybe $11 per share? Or do we want to go down below 108.84 and risk about, 20 bucks a share until the trend starts back up? Again, with the idea that the rule set has its own stop adjustment mechanism, right? If the trend resumes here, like Siri did, we looked at Siri a minute ago, right? Where it was trading in a big channel. Maybe back in March, it had a breakout and then it broke out again, and it's been trending up pretty nicely since March. This could be something similar. And so, for me personally, as I look at this, I just want to go through that checklist. Am I okay at 1371? Am I okay below 112 or am I okay below 108? And there isn't a right or wrong answer. If it goes down and knocks you out and you happen to have your stop down below 108, you're going to probably wish you got stopped out at 112 or 113, right? And not lose as much. Okay. So Eva says 15% trail stop. So that could be something that's interesting, as this moves around. I don't know how volatile this doesn't look like it's too volatile. Let's take a look. In fact, if you take your drawing tool and go this diagonal, if you go from high to low, you can kind of get an idea when this thing bounces in between. So that was about a 8.9% move. Do you guys see that in that little box? 8.9 from there. This pullback down way down to that low was 12%. So if you're trying to set a trailing stop, which we haven't used those very often in this class, but a 15% trailing stop seems like it would stay out of getting knocked out unless it really started to go down. So that's kind of a way to think about that. So have a vote for 113.71, have a vote for 112. I'll go ahead and use our rule stop here, and we're expecting again, and this may not happen, but we're expecting that old resistance to become the new support as this trend resumes, if it will. But we'll put the stop at 1371, and we'll send that order off. And then there's no guarantee this order will fill tomorrow because of if it opens above our limit order 123.92 and then just keeps going up, that we'll miss the trade. And then, of course, we don't have any guarantee when the stop order or if the stop order executes that will get filled near 113.71. Could gap over that. So let's send that order off here. All right, so there's the three stocks that kind of came up in that search on the communication services. There were a couple on the technology sector that came up on the search. I don't have time to run it today, but I wanted to show you one of them was Qualcomm. Qualcomm is one that we bought here on the breakout. It kind of continued up. Then it pulled back. If you were in our class a few weeks ago, we set up a buy stop order. So like Wiley was talking about, as we set up an order to get in when and if the momentum shifted, that buy stop we had here on the 13th didn't fill. I adjusted it again on the 14th. That one didn't fill. I adjusted it again here on the 15th with a trigger like 207.60. And that one actually got filled here. And then we ended up down one day, but it's had a nice little bounce since then. But this one actually has a valid buy signal on it again. We're not going to add to this position because we've already bought a few shares on Qualcomm. We have this in our portfolio already. We got in there at 198. It's trading for 236 right now. So not too bad today. Bearish candle might continue to pull back some, but it did make a new intraday high. So far that trend, short-term and intermediate trend are intact. All right. The other one that came up was ON. Some of you may not be familiar with this one. I've seen this one off and on over the last year, but ON Semiconductor, again, if you're not too familiar with it, you might want to take a look at that 1-year chart. This was really trading sideways for quite a long time. One of those that kind of broke out, fell back below the moving average, had a little double bottom, maybe price pattern, had some good resistance right there. About what do we call that? Let's draw a line there. And this is just something I like to do when I'm looking at newer charts or charts I haven't seen for a little while. I'm like, dang it, right there would have been a pretty nice little breakout buy signal. But I used to really get mad at myself for not taking that trade there. But ON wasn't on my radar. Here's another high, good, strong breakout. Look at that, huge green candle breakout when it broke above 73.75 there for resistance. And it's really just taken off from there. And so, sure, if we were watching it, I think we had a valid buy signal back on the 8th. I think we had another valid buy signal back here on the 16th. Since then, we had a red arrow. Let's zoom in a little bit. We had a red arrow on the MACD, so we didn't have a buy signal until this day here on the 14th. We had that valid buy signal was valid for 2 days because the MACD went red again. And now we're 2 days into a green arrow on the MACD again. And the stock's trading at this 1 year high, which is so uncomfortable sometimes to buy, right? And this is another scenario where this thing has moved so far off the 50 period moving average that it just feels uncomfortable sometimes to purchase based on your rule set. But, let's just again go through the mechanics. Okay, I'm going to change my drawing tool here to just this arrow. Okay, 85.65 is where the stop is supposed to go based on our rules. And that's risking about $30 per share. Is that 30 or more than that? 40. Is that 40? That's $40 per share. So our rules say we can buy 3 shares with $500 being put into it. But if we have a stop at 85.65, we can only go in there with about 2 shares because of our risk. So let's go ahead and place this order and then we'll be done for today. I'll give you a homework assignment to look at our open positions. So we said the stop was at 85.65. Make it good till canceled on both of these. This one here, again, we want the stop to be manual because we're going to change our entry was 124.89. That's the closing price. We hit confirm and send. Putting only about $250 in there. Why are we not putting more money in it? Because the risk between our entry and our stop, sorry, is quite a bit larger here. All right, so we'll put this down in our 2 green arrows, send that order off. And we ran out of time to cover our stops, but for homework, we did get some red arrows today. We actually got stopped out of Dow today. We got stopped out of Walmart yesterday. And so today, we have some red arrows on APD, BKR, COP, which has been red for a while. FANG, this is a new one. This one here, I think, would require a stop adjustment based on our rules. I looked at it earlier. I'll make that adjustment after our class is over. OXY has a red arrow, but it's been red again for a little while. And then Valero is a new one that has a red arrow today. So that's for homework. Go back if you want to adjust those stops. I'll take a look at them myself and we can talk about them in the future. All right. Well, hopefully that's helpful for you today as we go through, not only the top-down analysis, but also identifying which sectors are outperforming the S&P 500 using some of the quick tools that we have to help us, speed up the process. We ran that search in our, communications services. And then we placed an order on NetTease and on. So hopefully that was helpful for you today. Have a great class or day and good luck in your investing. See you, everybody.